Hi guys, welcome to the video. So I took this trade, which I showed in my last video, was around, I think it was around here or here when I was making my last video, and it was a 1 to 9 risk reward, as you can see it. So some traders say they can't wait or hold for a very long time for this. As you can see, this trade was held through the weekend, right? And some say once they take 2 hour or 3 hour, they are comfortable and they just leave the rest and watch it run. Do you understand? They leave money in the market. I even saw a trader on X saying they held a 1 to 8 hour for 3 months. That's 1 to 8 hour in 3 months, when you can make 1 to 9 hour in just a weekend, sometimes in a day, sometimes in 2 days. So now there's a lot of sentiments about holding high risk reward trades, and I could listen to traders yap online on X about taking small R or taking high risk reward, or I could listen to my journal. So guess who I listen to? I listen to my journal, right? Because my journal has all the information I need regarding how I trade, whether things go wrong or right. Do you understand? But how did I attain this level, which is the premise of this video? So most traders, they take, if not all, they put their stop loss in a logical way, because this is a logical way to put my stop loss. Now I don't want price to sweep this low. Once price sweeps this low, it invalidates my setup, right? So that's the logical way that I set my stop loss, and I believe most traders have logical ways to set their stop loss also. But once it's time to take profits, they tend to have fixed mindset towards taking profits. Oh, I just need 2 hour, I just need 1 to 3, and I'm done for the week. Or I'm only aiming for 3 trades in a month, or I only want 2% a month, because statistics says 5%. Hedge funds are content with 5% per year. Even the greatest inventors or investors, they are satisfied with 2% a month. No, man. And they have a whole lot of BS, that they didn't think of while setting their stop loss, because you're setting your stop loss with a logical approach, nothing more. You're not thinking about the 2%, then you're not thinking about 5%. But once it's time to set your take profits, you're thinking about there's a statistics that says this, that says that. No, man. So now, because you have a fixed 2R, you now have to rely on win rate. So if you have a fixed take profit, now you are relying on win rates. You need high win rates. Meanwhile, the market is not like that. You are going to have losing streaks. So for every 2 trades you take, you need 1 win to cancel out the losses. 2 losses you take, you need 1 win to cancel out the 2 losses. And there are sometimes even the best traders have 6 straight losses, losing streaks. So just because you have a logical way to take your stop loss, which is backed by your journal, by the way, now you only have a fixed take profit. You don't have a logical way of setting your stop loss. You don't have a way to exploit the market to take more from every profit that you get. So these are the kinds of traders you don't want to be like. You don't want to be like the traders that take fixed take profits. You don't want to be like them. They end up complaining about the market makers trying to get them. They end up saying a whole lot of BS, like market conditions are not good, this and that, and they are probably going to be unprofitable for a very long time. So now I don't want you to be like that, right? So you need to be confident in you need to be confident enough to take high risk reward trades. So even though you have a low win rate, this can come in handy for you, because this is a 9 hour trade. For me to lose this 9 hour, I need to take 9 back-to-back losses, which has put me in a very good position. So even though I have 6 losing streaks at this point, I'll still be in profit. Even though I have 6, 7, 8, I'll still be in profit. So how exactly do you get confidence enough to hold trades like this, or trades like this? This is a 4 hour, or trades like 16 hour that I've taken in the past. How do you get confidence enough? Yes. So first thing you do is you go back to your journal and you how watch every trade you've taken that have hit TP. Obviously, they don't just hit TP and hit TP and then reverse. For example, see this one, as it hits TP, it reverse for a little bit and then continues going up. I'm expecting it to hit somewhere around 13,910, right? Because I just didn't leave it because this is what is in my journal. But I will consider this some other time in the future. So back to what I was saying, you need to go back to your journal, watch every trade that you've taken that hits CP, and watch how far price goes above that CP. As you need, basically you watching how much you left in the market, right? So you keep this information in your TP, in your journal, for 3 months, right? So this 3 months is relative, depends on how frequent you see your trades. You can decide to do, if you're taking like 50 trades in a month, which is too much in with my own way of trading. If you're taking 50 trades in a month, it might be enough for you to get the information you need. But for me, I'd say 3 months, right? So you watch what happens when after price hits your TP. Watch how far it goes before coming back to your stop loss. So watch how far price goes from your normal TP to before coming back to hit your stop loss. So after you've done this for 3 months, you need to find the average of how far price goes. See, for example, now this is, say, 112, 200 is your normal TP. Then price gets to 113,692. It won't do like this for all your trades. If you check the average, it might be 113,000 from, say, 12,200. So that's like 800 move. So instead of you taking the whole thing, you're going to come to a common ground, which is the average for all the take profits that you've seen. I don't know if this makes sense, but the distance between your take profits and how far price went before coming back, you come to a common ground of it. So if it is 12,700 for every trade, which is the average of every trade that you've monitored like this will be your next extended profit, right? So this is your extended profit. So in your journal, you have 2 sections for your take profits, normal take profit and your extended take profit. So your normal take profit is TP1, which is here. Your extended should be TP2, which is here. So once you get your win, your first TP, which is TP1, you log it, which is 9.58, and then the second TP, which is final TP, TP2, 11.8. You are going to log this for 3 months. Then after 3 months, you start taking partials. You take partials here and you take your full TP here. Did you get that? You take your full partial. Once you take your trade, you take partial here, might be 70% or 80%. Take partials off your trade, which will leave you contents, to reduce your tension. So now is the experimental part. You wait for TP, for price to get to your final TP, right? So this is your first take profit, this is your second take profit. You are leaving less money in the market, and you are taking more out of the market. You're taking more profits. Do you get that? So you need to log for 3 months first, start taking partials for another 3 months, and then maybe by that time you'll be comfortable enough to take only one profit, which is your final one, as you've squashed your previous system that allows you to take profits here. This is your refined way of taking profit now, right? And some of you might decide to continue with taking partials and then your final TP. which is also nice, which is also good, right? But it only increases your risk reward by a little bit if you are doing the take partials and final TP stuff. So this is how you refine your trading to take more profits, right? See how, notice how I said you need to wait for 3 months first and then another 3 months. It means you need time and data before you can say you want to refine your strategy. You need more time in the markets, you need more data to see what has happened, at least 3 months to see what is happening in the market. And a quick side note, things can really go south very, very fast in markets. You can take 10 straight losses, you can take 9 straight losses, 5, but know this and know please that your your risk management will be what will save you. If you are just starting out, don't risk more than 1% per trade. I have spent like 5 years and counting in this market, and now I'm risking 0.5% per trade. Do you understand? I'm risking 0.5% per trade because I monitor more than one pair, like at least 3 pairs. And if I want to trade every pair that I'm monitoring, I take 0.5% per trade. And I'm also a pro firm trader. I do not want to breach any rules, so I'm in a more conservative mindset. I have a more conservative mindset when I'm trading pro firm. But once it's personal account, I'm free to do whatever I want. Do you understand? So you can trade your personal account and risk 1% or even more. But once you are trading pro firms, keep it low, right? I hope you've been able to learn something. So peace.